Hey guys, I hope everyone is doing well. Today I will be doing something different, okay? This is going to be a trade recap. The trade which you took yesterday, I will be breaking it down to what I was looking for going into the market, what I was expecting the market to do, okay? And why I took the trade. So let's jump straight into it. As you all know, in the lunch macros, we displaced heavily lower, okay? We had this 4 hour bullish fair value gap over here. I'm gonna mark it. And at 8 p.m., okay, we closed the fair value gap. So I was bearish because we have inversed bullish order flow. We still had this big 4 hour imbalance. So probably price is going over there, right? But then we had another one over here. We had another 4 hour bullish fair value gap. If I draw from the low to the high with the fib, you can see that that fair value gap was in a discount. So overall, I was thinking that price is going in that fair value gap, since that fair value gap is paired with the discount of the range. So I'm gonna delete this one. Moving on to the 1 hour time frame, we had a 1 hour bearish gap. So I would like to see price retracing back into that gap, and then we can start seeing price moving lower. We retraced inside that gap at 8 p.m. So now I'm gonna remove this for our fair value gap. I am considering that price is going inside this fair value gap once we retrace inside this 1 hour gap. If I draw from the low, if I draw the 1 hour candle, because this was the last displacement candle, we can see that we retraced inside the 1 hour gap and we hit the equilibrium of the range. So that's something which I wanted to see. Okay, now moving into the 15-minute time frame, at 8 p.m. we have swept this buy side. We started seeing a move lower, but obviously we were not inside the macro. I can see that we have inversed this 15-minute gap, okay, bullish, and also this 15-minute bullish fair value gap. So now we are respecting the bearish order flow and disrespecting the bullish order flow, because we are disrespecting and closing below the 15-minute bullish gaps. Moving in, and then you can see that once we have inversed all these bullish gaps, obviously I wanted to see this low getting hit. So I want to see this low getting hit, but not. I did not want to see that low getting hit, because we have created 15-minute gap and 15-minute bearish gap over here. Before I wanted to see price taking this low, I would first want to see price retrace back either one of these bearish gaps, so then we can see a model to take shorts to target that internal low. This is internal sell side. I was not targeting the 4 hour gap because it's too much, okay? One to thirst forward is enough. So now we can see that we retraced inside 0.5 equilibrium of the range, okay? We have hit 1 hour fair value gap, we have inversed two bullish 15-minute gaps. All I want to see is a retrace inside one of these 15-minute bearish gaps. So as you can see here, we have created a 15-minute gap. Perfect. If price retraces, most important, we do not want to see price inverse that bearish gap. We want to see the price we want to see price holding that fair value gap. Going in the 5-minute time frame, okay? Actually, we're going in the 1-minute time frame. I'm gonna put the replay mode over here. Once price retraces back inside that 15-minute gap, I'm gonna draw the fib from the high to the low. We were almost inside equilibrium of the range, but actually yes, had touched the EQ of the range, and if I'm not mistaken, we had an SMT. Now we had the 30-minute fair value gap as well. So basically, right when we closed the 30-minute candle, which was here 21:30, we retraced inside the 30-minute unfilled and the 15-minute, which was, I think, not filled before. So we had retraced inside 30-minute unfilled and 15-minute. We have swept this buy side inside the imbalance of the gaps. That's extra liquidity. So buy side liquidity was swept here. Now, what I want to see, since price retraces back since price retraced back inside this 15-minute and 30-minute and buy side liquidity has swept, now I would like to see these lows to get hit. Okay, we have a relative equal lows. Why we didn't take out this low here? Because we created 15-minute gaps, and when we create 15-minute gaps, bearish or bullish, that can act as liquidity, and price will then take the opposite direction. Perfect. So once we retraced back inside the 1 hour, we came down to sweep this low, but initially we did not sweep it out. We created relative equal lows, inversed two 15-minute gaps from here. Now I'm on the 1 minute time frame, as you can see. And when we inverse these gaps, we have created 15-minute gap and 15-minute gap here, which you can see. I'm on the 1 minute time frame, it's gonna look different, not the same, okay? If you go on the 15-minute time frame, there you go. Okay. Now all I want to see from here is to price take out this low. Okay, so we had the 1 minute bullish fair value gap, and now I want to see this bullish fair value gap getting inversed with a strong displacement. So I want to see price close below this short-term low and the 1 minute candle inversing this bullish gap. Okay, if you have seen my 5 ICT concepts, you know what is an inverse fair value gap. If not, before watching this trade recap, you should go and watch the other videos so you can understand me well. So I'm on the replay mode here. Okay, so perfectly we inverse that 1 minute gap and we did heavily displace through that short-term low. So now with the displacement, what do we create? A fair value gap. If you see my models, ICT unicorn model and silver bullet, you know what I'm referring to as well. Once price closes this bearish gap, I will take my short position. I put my stop loss below the candle high of the middle candle which we created the gap. In this case it was here because we have opened 2 minute gap as well. We have opened a 2 minute fair value gap. And I'm obviously gonna target the lows which haven't been swept earlier. Once price retraces back inside that 1 minute, I take my short immediately, and that's what I did. Okay, so price retraces back, I took my short, and now when price displaced and closed through the short-term low, because this low we retrace inside this gap. So I take my last short-term low from where we started to retrace into the gap, and if I see a candle close through that short-term low, I will put my stop loss break even. So once price broke through that short-term low, I put my stop loss break even. Okay, so now I'm moving my stop loss to the entry point. I expected this 1 minute to open, and that's what we did. We opened the 1 minute bearish gap because I wanted to see price retraces back into that gap and continue lower. Okay, simple. So as you can see, price retraced back into that gap. Okay, heavily displaced lower, and from here I'm expecting price to take out that low, which we did not take out that low, and from there we saw a very huge candle which took us out for break even. I mean, it was a good trade, okay? As I already said, we retraced inside 1 hour gap. Why? To come and sweep out this low, and long term to come and retrace inside this 4 hour bullish gap and to come inside the discount of the big range. That's what happened actually later on the Asia session. And then I go on the 15-minute time frame from the 1 hour. Okay, I can see that we had inversed two bullish gaps, so now order flow bullish is getting disrespected, and I wanted to see 15-minute gaps getting created. We created one here and one here. When price retraced inside the first 15-minute gap, We saw the model, okay? We saw everything aligned. Once we're in the macro, we saw buy side liquidity getting swept, market structure shift, 1 minute inverse. So again, since we inverse this 1 minute bullish, even more price wants to go down because bearish order flow is getting respected and bullish is getting disrespected. And when we take shorts, we want to see bullish order flow getting disrespected. If we are taking longs, we want to see bearish order flow getting disrespected. Okay, we created a 1 minute fair value gap bearish with the displacement. So now, since we are disrespecting bullish order flow, I expect this bearish gap to hold so we can take out the short-term low. Once price closed below the short-term low, we put our stop loss to break even, and then it either hit take profit or it either hit the break even. If it hits break even, we will not lose anything, in this case that's what happened. Okay, so a break even is considered as a win in my opinion. And then yeah, then price actually, and then it hit the low. Okay, why did it take us out for break even and then run into our take profit? Because we have created a 5 minute bearish gap. Price retraced back inside that gap, took out the buy side liquidity from here, and then it went lower. But when we were here, we did not have a 5 minute. We created the 5 minute, I think, somewhere here. So when we created the 5 minute, we retraced the first time, went lower, did not sweep it out, went up again, took out that buy side, retraced back inside that 5 minute. We did not inverse that 5 minute. Okay, so we continue to hold bearish order flow, and then we went out. We went to sweep out the sell side liquidity. So yeah, guys, this was the breakdown of the trade which we took yesterday. For those who didn't understand shit, it's very important to go on my Discord, YouTube. I have a lot of content there for free. Go watch it, and so then you can understand what I'm trying to implement into day-to-day basis, and for you to also understand the trade recaps. So I hope you enjoyed it, guys, and until then, see you in the next one.